Professor Richard Wolff drops by with some thoughts on, the state of the economy and the future. Check this out. Leave your comments, ding the bell, share it with your friends, and subscribe to our channel. Back, Thom Hartmann here with you. On the line with us is Professor Richard Wolff, the economist, co-founder of democracyatwork.info, author of numerous books, his latest, Understanding Socialism, and his other website is rdwolf.com. You can tweet him at Prof. Wolf with two Fs. Professor Wolff, welcome back. I was absolutely astonished to see this piece over at Pam and Russ Martin's site. They talk about economics a lot. Sometimes they get into some weird right-wing stuff, but this seemed pretty straight up. Most Americans, they write, likely assume that Jerome Powell, the chairman of the Federal Reserve, is an economist, like the prior chairs of the Fed over the past 40 years. But he's not. Powell is a former investment banker at the Wall Street firm Dillon Read, former partner at the controversial private equity and leveraged buyout firm, the Carlyle Group, which has spent over $1 billion just in the past 10 years lobbying the federal government for tax breaks and loopholes and things. A former lawyer at Davis Polk, this big law firm that advised the government and the Treasury in 2008 on the Wall Street bailout. And the vice chair for supervision at the Fed, the guy who is in charge of oversight, who works under Powell, his name is Randall Quarles, and he's in charge of supervising the largest and most dangerous Wall Street bank and holding companies in the U.S. He also worked at Davis Polk and the Carlyle Group. What the hell is going on in the Fed, Mr. Wolff, Professor Wolff?
Well, I think what you're seeing is throwing away the veneer. It wasn't very thick to begin with. The veneer that the Federal Reserve is either independent of the rest of the government or independent of the big banks that it does most of its business with. Other governments have thought it was necessary, as you say, to have professors of economics like Ben Bernanke or Janet Yellen in that position. They don't bother with the veneer anymore. It's a bit of a hallmark, I think, of Mr. Trump. You put the fox in to guard the hen house, and you don't disguise the fox as though he were anything other than a fox. And this is Powell, Quarles, people like that have spent their entire lives working in the industry they are now supposed to police. It's ridiculous. The mere appearance of conflict of interest, if you took it seriously, would have meant such names could not have been considered. But we're now supposed to believe that because they, quote unquote, know the business, they're the right people to police the business. It is crazy, but it's just one more step in a government becoming lock, stock, and barrel, one with the people who sit at the top of the economic pyramid.
So, we've in previous conversations, Professor Wolff, you and I have talked about how the Fed is doing things that may go well beyond its charter. Beyond its mandate, but beyond its charter itself, beyond what it's legally authorized to do. He has stated that he's willing to buy equities. I'm pretty sure that's not in his charter, and I'm surprised, frankly, that they've been able to buy corporate bonds. I thought that government bonds was the limit of their powers. And do you think that this let's say questionable, because I can't assert that it's illegal, behavior by the Fed, which has served to prop up the biggest corporations in America and actually to enrich them now? I mean, the Fed has passed out $10 trillion, or $6 trillion, excuse me, in loans to giant corporations by buying their bonds, from Ford to, on the list goes. Is it possible that the reason why the Fed is doing this, arguably for the first time in its history, I suppose after 2009 there was a little bit of this under Janet Yellen, but is it possible that it's doing this because of the influence of people like Mr. Powell, former banksters, major, multimillionaire banksters, getting inside the Fed and influencing its policies, other members of the Fed Board of Governors, number one. And number two, is this going to lead to a disaster? I mean, it reminds me of the massive deregulation in 1927, 1928, under the two successive Republican administrations. When Hoover was, and going back to Harding, frankly, refusing to regulate the banks and the brokerage houses and the whole lending industry that was, helping stockbrokers buy things on margin. Are we seeing like a recap or a reboot of that same thing?
I think so. I think what you're seeing, I would put it slightly differently, but you're basically right. These are people who've spent their lifetime manipulating the stock market. They did it as lawyers advising the clients that were doing it. And then when they became parts of entities like the Carlyle Group, then they began doing it themselves. That's who they are. That's where they come from. So, yes, they would be the ones to take the Federal Reserve beyond its traditional business, which is dealing in the government securities and nothing else, and now going to basically prop up corporate America by buying those bonds, and the next step will be to buy the equities. Look, make no mistake, the other reason is also valid. We're in a capitalist system that is in very, very deep doo-doo. This is the third crisis in the 21st century, the dot-com in 2000, the subprime mortgage in 2008, and now the third one, the corona one, the stock market each time taking a major hit, risking a general collapse. In comes the cavalry, i.e. the United States Treasury, and now the Federal Reserve, basically throwing unspeakable amounts of money wherever and however needed. If the Federal Reserve now, with Powell, takes that last step and starts buying securities, and by the way, there's quite a bit of speculation in Wall Street that they did that quietly and off the record back in 2008 and 9. They were so scared. So for all we know, they may have already done it. We don't know. But if they move in that direction, then you will see the government directly propping up the stock market, using printed money to keep the prices of stocks high, and therefore further disconnecting the small number of people who own significant amounts of stock from everybody else. In short, this is the recipe for going even further into the inequality of this society than we already are, with all the destabilizing that comes from that.
It seems to me like what's going on here is that Powell has figured out a way to rig the economy, or at least that portion of the economy that's of interest and value to the investor class, to protect the investor class, while average working Americans and poor working Americans, screw them. Do I have that right?
Absolutely. I mean, look, there was no murmur of the trillions of dollars that had now to be spent, giving it to the top, and then hoping it trickles down in the classic way. Meanwhile, when it came to how much money you give to the average person, there were big worries about the government's debt. Can't be more than $1,200, which doesn't even pay you a month's rent. They're now squabbling over the food stamps to help the people who are hungry. Absolutely. What they're doing is saying, our system doesn't work. It goes to the brink 3 times in this century, and we're going to bail them out to make them whole. And we're going to stop when we're done with that, because we don't really have to take care of anybody else. They're either politically disorganized or split or passive, and they're not going to do anything. So we're going to take care of ourselves. And Powell and Quarles and people like that, that's who they are. That's what they do.
So what's the end game?
I'm afraid that the end game is when this gets to the point where things are so bad that even this kind of policy doesn't work. When people are so frightened about the underlying weakness that nothing they do will make people buy those stocks or hold them. And that's a very, very dangerous risk looming.